Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. All right. Sorry, I'm a little bit behind here, but there isn't too much here for this 6:30 news. We've got jolts today, though, right when we're like supposed to be ending. So I don't know, how am I going to deal with that? We'll figure something out. But that one's, I think, going to be a pretty big deal. By the way, good morning, Vital and A-Paul. I'll come to your question in a bit. Let's look at the charts first. So here yesterday, man, I mean, for most of the early morning session, we were kind of on a little bit of a downturn, just kind of retracing what had happened on Friday and the overnight. But then after that, things just like really explicitly turned higher. And I'm not 100% sure what was the driver behind that flow. I really was not expecting it. But yesterday we did get a report that U.S. Treasury reported a sharp drop in debt borrowing needs, and that may have been what kind of propelled things higher. That is a pretty significant bump up there, and one that was not necessarily accompanied by like risk-off sentiment and crazy headlines and everything. So the treasuries may finally be set on the road for, you know, rates lowering like they should be. S&P 500 did not move as much yesterday, okay? Now, one thing that I should highlight in the S&P 500 is that we have been in a blackout window because of earnings. That window is, you know, it's about to open up again. They can buy back shares. So many firms are turning tactically bullish right now. That might be a really good flow for you to trade off of higher. Oil is dropping a little bit today, kind of falling out of its range. That's curious. Gold's still plodding along. I mean, that looks good. Some of this movement was really crazy. So, you know, a bit of a consolidation I think would be good for them. I'm liking what I see there in silver. They're kind of biased to the upside. Copper also seeing a similar thing, although obviously much more muted. The Japanese yen saw a jump yesterday with the treasuries. And Bitcoin finally. Bitcoin's still right about where it was, around 96,000. We do have the algorithm on. It's already taken 2 really dumb trades. I think that the filters, or sorry, the thresholds that we chose, we wanted it to trade a decent amount, and that was primarily why we chose that. But it does look like I maybe overfit it to when things were super crazy, because like 53%, it just takes too many trades. It just takes too many trades. And it, it wouldn't be so bad if it wasn't giving up the spread every time. So I don't know if we'll ever get to fixing that, but I should fix that. Liquidity over here in the micro 10-year looks pretty okay. By the way, I should be able to get more levels of liquidity than that. Yeah, that's what I thought. Better. Much better. Then I can kind of see how far out here that people are even bothering. Interesting. There's a lot more liquidity on the downside than there is on the upside. That kind of suggests to me that retail traders are short and that these are all like their take profit orders. That's my theory. That's interesting. All right, so Vital asks, I decided to trade 6E futures with the knowledge that I earned with ZN. Do you have any advice trading 6E? Don't. I don't know. No. So trading the currency futures is a very different beast because it is not really the primary market, right? In the and when I say the primary market, I mean like the market where price action tends to originate. So in the treasuries, the futures are kind of the primary market. That's where price action tends to originate. Even though there's maybe more money going through the cash treasury market, the moves seem to originate in the treasury, especially in the options. 6E, on the other hand, is people are primarily using that to hedge other futures trades. Like for instance, maybe I am buying gas and selling it overseas. Well, then if I'm going to sell it overseas, then I need to hedge myself against the change in the currency. And so I'm going to use 6E to hedge myself. Make sense? The price action in currencies tends to originate in the actual like intrabank foreign exchange market. And so that makes trading currencies really, really hard, right? Because we can't, we don't really get to see the order flow. And again, like order flow is kind of what helps us understand what's going on. That's how I'm able to, when I combine that with the news, I can say, okay, that was this flow, etc. When you get over into currencies, that becomes very, very difficult. So if I were going to trade 6E specifically, I would be really focused on, who is actually using it and how do they tend to do it? Because I think what you're going to see is that the order flow in 6E is completely different, if not like the exact opposite of the order flow in ZN. You're going to see like that price and cumulative delta tend to be anti-correlated because it's mostly people hedging. Okay. You might also find, well, I don't know. You might find there to be a stronger imbalance. Like maybe it's the case that people mostly buy. Actually, we could probably game that out here. Let's see here. Let's open up a chart and go to 6E. Oh. Okay. Okay, so we got Levitt, one of Trump's advisors, is speaking right now. I don't want a minute, I want day. 1 day, give me a year. And then we'll add the COT indicator. Okay, and well, we'll leave those ones on, but I'm actually interested in total long and total short. Yes, it is true. There is net more shorts in 6E. almost all the time there's more shorts than there are longs, regardless of which way it's going. Yeah, I notice you don't have much content on footprints. What's your take on them? So a footprint can be useful to look back and try and understand what happened. But I'm not really a huge fan of footprints simply because retail traders have built up this whole kind of set of setups and beliefs around footprints that are basically junk. As an example, one of the ones that you'll hear is if there should be a tail on the profile, like on the footprint. So if you see at the high that there's a number on both the buy and the sell side at the high, they call that an unfinished auction. And they believe that when that happens, that there is a high likelihood that they will go and finish that auction. This is kind of based in a belief that kind of comes from auction theory, that basically the price will continue to auction in one direction until it's completely finished. And if there was somebody willing to sell at that price, then it's not finished. They're going to go until there's only, all of the buyers are exhausted and there's that little kind of tail. It's nonsense. And I very early on, I went and somebody gave me an indicator that identified those unfinished auctions, and I back tested it and it didn't work. So, I feel that most of the things that people tend to teach. So actually, can I segue to something a little bit different here? Here it is right here. So there's a really interesting thread on Reddit this morning. Okay, from System Creative 3716. I spoke to multiple institutional traders. I recently stayed at the Four Seasons for a few weeks where I got to know a bunch of traders. I was speaking to a few friends at the lounge when they overheard our conversation. My strategy is order flow and using historical data. Understanding volume and liquidity in the market is where I found my edge. They spoke to me about modern trading strategies and were laughing. They use quant in their trading and their numbers boil down to 0.0000001% when taking risk. The summary of the conversation was that it is easy to become a successful trader, but upscaling is the hard part. These guys make a few trades a week, and the profit from these trades surpass that of doctor's salary. They're given capital by the institutions to do so. They use quant math to trade, paying hundreds of thousands to see future orders. Oh, isn't that interesting? That is terminology that I use all the time, isn't it? They told me that they loved ICT because they are liquidity and most modern day strategies are worthless. Basic strategies, and most modern day strategies are worthless. That should just be a period. Learn to use punctuation. System Creative 3716. Basic strategies succeed. Understanding important areas of the market is where most successful traders actually do well. They said, I am good but not special. They told me it isn't hard to become a successful trader, but hard to become one who understands the math in the order flow. To sum it up, they like modern trading strategies. They like modern strategies like ICT, Padilla arrays, and most of those things because it causes liquidity in the market for the big institutions. Okay, and this is kind of mirrors my own experience when I spoke to traders from a block trading desk, and they used similar language. Future orders. And future orders is something that we see in the literature as well. Oh, Padilla arrays is supposed to be PDA arrays. Oh, okay. Okay, I gotcha. I actually haven't heard of that one before. Yeah, they probably did type it on mobile. But So this one stands out to me because obviously anybody could come in and say, well, I spoke to somebody, an institutional trader, or like ICT claimed to have been an institutional trader or to have written the algorithm or something like that. But this guy actually uses some of the language. It's very much reads to me like somebody that spoke to real institutional traders, doesn't necessarily have enough context to understand what they're talking about, but is taking the words that they used and the things that they told them. This very much matches up with what I hear from institutional traders. I find it very interesting that they say that the numbers of risk that they're taking are super, super tiny and that they only take a few trades a week. So it's like low frequency. That's really, really interesting. AO asks if I wrote that. No, I didn't. I tell you what, though, I don't think that if I had like paid somebody to write a post like that, I don't think that it could have come out better. Like, it's this perfect example of the kind of language that we see and that the concepts that I'm trying to teach you. There is obviously some more advanced math in the order flow that I don't understand, that I don't think that you would really even be able to like teach without having access to the institutional order flow, right? Because what it sounds like they're doing is that they're buying institutional order flow that identifies individual players in the market. And then they use that to understand how that institution executes in order to predict what they're going to do before they do it. And then they combine all of those different flows together based on what's happening right now. And they take all those predictions together. They can predict times when there's going to be a big imbalance. And when there's a big enough one, they take a trade. That's why they're not trading all the time. Right? Okay. So the reason I was bringing this up in relation to, Chris Kylie's question about footprint charts. They say that they like the ICT stuff because it provides liquidity. And this is the thing that has always stood out to me about the ICT strategy. Like the big setup that they like is kind of like it goes lower and then it reverses like that. That is basically their setup. There are some periods of the market where you're going to find that does well because it's like buying the dip. And for a really, really long time, I wouldn't say that we're in that time anymore, but for a really, really long time, buying the dip was the strategy. And if you just bought the dip, you probably did okay, right? They're looking for a reversal. But if I'm a really big institution, somebody that is executing like a really big order, what you'll tend to see when they're executing is it'll go like this. You'll have, kind of like a short-term period, and then it'll go lower again, like 45 minutes later, right? So, they're waiting for the market to recover. And the more people that end up trading in this area, the better, right? That's more liquidity for them. That helps them accomplish their job faster and at a better price. And this ICT strategy is like almost the opposite, right? It's if it wasn't for ICT, saying all these crazy things like that he wrote the algorithm and all the other obvious nonsense, I would almost think that it was all a ploy by some institutional trader to try and create more liquidity for themselves. It's not that hard, especially on a 1-minute chart, for them to make a particular pattern in price appear. And they can explicitly make that pattern appear so that people will start to trade it, and then that's liquidity for them, right? Okay. Well, This applies to short-term order flow signals as well. Like what my algorithm is doing, going long or short based on an imbalance. It's a naive strategy. I've said that from the very beginning. It's a naive strategy. By the way, the prices that it's getting filled at are not correct. Or at least that it got filled out on that last order is not correct. Well, maybe not. I don't know. Maybe it just jumped 3 ticks. But anyways, because it's just too easy in the order flow to make a certain little thing happen. It's on the short term, and then you make that thing happen. There's a bunch of people, they try and trade it one way, and then they get stopped down, and people trade it other. The end result is a bunch of noise, a bunch of people submitting orders, and if you're trying to, buy or sell a ton of something, that helps you. That helps you. So you should really be skeptical of any kind of short-term pattern. Order flow is really useful because that's how you can see like what's actually going on. But I do not look for patterns in it. I don't look for setups. What I would call a setup is I have a prediction and there is a huge imbalance in my prediction. But my prediction says there's going to be a lot more buying than there is selling. Okay. By the way, my prediction here today is that if the JOLTS number at 10 o'clock Eastern time, they are expecting a reading of 7.5 million versus a previous reading of 7.568 million. This time, I am a little bit unsure what the actual number is going to be, but I suspect because of all of the chaos that we've had the last month, and this is the thing is that I'm not exactly sure how much the JOLTS lags like the actual market that I see, right? But it seems to me the job openings has declined a little bit. So the play that I think we see here, well, if JOLTS is low, that's going to result in some buying here in the treasuries. I think that the treasuries are already kind of easing off on the there's going to be inflation thing, right? Because first of all, like all of the tariffs have been delayed and so forth. And second of all, we've kind of had a big deflationary impact from all of this. And the market does expect the Federal Reserve to cut in June. Okay. Then on top of that, we're also getting this buyback window opening up in the S&P 500, which is kind of a positive over there. I suspect that there might also be some people with shorts that are closing their shorts. And so if on top of all of that, you got a bad JOLTS number, I think that we would get a really strong order flow long. So that's the imbalance that I'm looking for, right? This is like an economic number coming out a certain way when the flows were already kind of tilted to the long side, right? That's my setup. And I'm not looking for some sort of pattern and, how price is moving or anything like that to take my trades. My discretionary trades, at least. Let's see here. So going all the way back, people need to stop calling that bonehead ICT. What are we supposed to call him? I don't know. The whole thing is just kind of weird because I knew of this guy before he became popular because somebody came on my stream and tried to promote him in a way that kind of made me think that maybe it was actually ICT. But now I look back at it and I'm like, well, but actually he does just have this really aggressive community that promotes him for some reason. He's a narcissist, and narcissists always seem to have flying monkeys around them. I don't know what causes that phenomenon, but that's the way It's the way to be. But anyways, you know, we looked into him and kind of picked apart all of his not before it became massively popular. So that was really interesting to watch. It was also funny because at the time, the Forex community knew him really, really well and was sick of him. And then what happened? He switched over to futures and caught all of the people trying to do the combines, and that's kind of how he became massively successful. Anyways, it's funny, speaking of institutional traders, a friend from high school who worked trading desks in Moscow and Stockholm and New York called me over the weekend to talk about tariff volatility and see how I was doing. And he doesn't talk like that at all. He talks standard deviations. That's his nut. So he's probably trading options, isn't he? He's probably trading options. Main markets are not informationally efficient. Oh, vital. I really like that. That's good. I agree with you about the unfinished auction part, but what about trapped deltas? So I'm gonna say I'm not 100% sure what you mean by trapped deltas. Like, I think you might be talking about situations where there's a big imbalance on the footprint. You know, like there's a lot of buy there, but not a lot of sell or whatever. But again, if you were to go and do some sort of a back test and say when that situation occurs and go and take a trade, I think you're going to find that it's not really that effective at predicting where things are going to
go. Order canceled.
But I guess another thing that I would say is that there needs to be empirical evidence for if you are going to have a setup, there should be some sort of empirical evidence for it, right? The thing that really, really drives me crazy about all technical analysis is that, like, isn't the whole point of technical analysis is to be able to take out the emotion from the trading and to just trade what the data says, but then none of the technical analysis traders actually want to see the stats for their setups. What's with that? He trades stocks? Well, isn't that... Oh, okay, I don't know. So if he's trading a portfolio of stocks, I guess that would be another thing where I guess you would maybe see... What were you talking about? Standard deviations. Maybe he's using standard deviations to select which stocks he's going to get into and out of and stuff. Although I would think that order flows would be really effective on stocks too, right? Okay. Day trades. Well, but so hold on. Because, like, I don't think that we should call what institutional traders do day trading, though, right? You'd really want to understand what his strategy actually is, right? Is it a momentum portfolio? Is it block trading? Is it liquidity provision? Although I would kind of doubt liquidity provision. I mean, that would mean that he's a specialist. Then I don't... What you've said so far already doesn't sound like a specialist to me. If we had live open interest, that would be amazing, yeah. Oh, okay. Oh, okay. So that's maybe different. He is not currently an institutional trader. He was one. Okay. So he was an institutional trader, and now he's day trading stocks. I kind of have always suspected that there's probably a lot of room for good discretionary trading with stocks compared to futures, though, right? Because you can always just kind of find the stock that's doing the thing that you want, right? Yeah, and he does legitimately well. Like what if we took my algorithm here that seems to trade really, really well in illiquid conditions and went and put it on whatever was the big moving stock that was illiquid that day? You know? Man, it's already taken 1, 2, 3, 4 trades. Oh, but the one was, oh, that was it a stop out? Yeah, it was a stop out, and it's not in a trade now. Okay. It's 60%. That's a pretty good imbalance. I should probably be long already, huh? You know what? I wasn't even thinking about it like that. I should be looking for that I should be looking for a discretionary trade here. I probably should have done it way back. You know, while I'm talking, there are Trump speakers, right? I should really be... Oh, hold on. Why did it sign me out? That's weird. I think I was geeking out too hard here, man, and kind of lost focus. I don't know if those prices are a very good place to do it. This location is a very good one to do it. Take a live trade. Yeah. So the thing that kind of irks me about today is that I kind of am thinking of or am stalking along, but just not yet. I was thinking that it was going to be more at, like, you know, after the news, but no, maybe this was a better opportunity and I missed it because I wasn't really paying attention. I didn't plan it very well, did I? But then if I'm going to wait until after the news, that's when I've got to go. So I would have to do it now, yeah. But I'm not going to do it in this spot. I'm already getting signs of the liquidity being strained. So I think I missed a trade, but we can keep an eye on it and we might get one later. Let's see here. I thought he got his ass kicked in during the tariff volatility, hence his call. Oh, that's probably a good chance that he did. Like, I think that like the specialists and like market makers can do okay during those situations. Like, usually the banks do post more profits after this kind of happening, right? But like everybody else gets screwed. It's something that I've always kind of wondered about. Like, well, you know, some people, they're going long and some people are going short. So shouldn't, you know, when volatility increases, shouldn't you see a bunch of big losers and a bunch of big winners during those times? And yet the overwhelming evidence that I see from just people posting online is that they all just get slaughtered during times of volatility, you know? I'm gonna blow my nose here. Okay, interesting. So I guess I also did not realize here though that this flow long might be because the S&P 500 is dropping pretty hard off of this. But what did they say? Percent, we would like to see the internet tax in the EU removed. Trump will sign an executive order on auto tariffs later today. Percent now talking about institutional investment managers panic selling stocks, something he would certainly know about. We need precision manufacturing in the US, not necessarily textile industry. So then why are all your policies basically set up to punish Temu and not anybody else? Tax bill is moving forward, and that will give certainty. So I don't see anything super significant other than auto tariffs, right? But the flow in ZN did not necessarily look to me like a risk off play, but now I'm hearing something about Amazon. I don't know. Like, here's the other thing, Uzi. I kind of wonder if the shortened trading session just does too much damage to my trading strategy. Because the times where I've done really well were times where I was like taking a trade really early and I held it like till 9:30. And so I am kind of wondering if I kind of have to change my focus a little bit. And maybe like, you know, we can continue to do this and have our discussions in the morning. And maybe I don't necessarily take live trades, but put more focus on my stock trades, because that would be something that I would be able to manage better without, you know, something that are like swings where I don't have to be really keyed in and paying attention the whole time, you know? So that hour is killing me, man. Like, not killing me like, you know, like it's hurting my trading or anything. I guess you know, since I've been doing this, I haven't really taken very many trades, but it just like, I want to stay that extra hour so much. And then the other thing is that when I'm at work, I am running code the whole time, running code or any meeting the whole time. I haven't had the time to go and do my reading and check up on the markets and all that until I get home. I'm sure that will probably change a little bit over time, but man, it's a really jarring shift for me. And that was kind of the thing, is that part of the reason why I stayed at that one job when I started doing this was because it was so convenient. You know, it worked with that well. I guess back then I got 30 minutes more. But you know, it worked. It worked. And then I switched because, you know, it was like work from home and it worked together with it really, really well. It kind of seems to me that there's been another shift in the market, and I don't know if a situation where, you know, I'll be able to stream until 9 o'clock is really going to come along again. What do you think? Do you think that the work from, like everything moving to work from home was like a permanent change, Or do you think that all companies are going to force everybody back into the office? I guess this company isn't necessarily forcing everybody back to the office. It's kind of more this particular role I need to be there. And I guess that's another problem, is that I do kind of feel that in order for me to continue progressing in my career, that I need to be in the office. Like the team needs to see me there and talk to me regularly and give me opportunities to mentor people and things like that. Yeah. Well, I guess I have to take a longer term view of it as well. That's another thing. You know, 10 years from now, we might be in a different situation and we'll probably still be doing this, right? What's this from Mark Mitchell on the Canadian election? Mark Mitchell, here's probably why Pierre lost. His reaction to the Trump Canada annexation was outrage. You just aren't going to be a leftist at outrage. Maybe. But I really don't see how him taking a different tack would have helped him. That one doesn't necessarily make sense. I think the reason that Pierre lost was because Donald Trump said that he wanted to annex Canada. Oh, you know, I should bring the camera back. Okay, so I do feel that my initial kind of instincts on this move were correct. I would actually say it's pulled back a little bit further than I expected. I am seeing some fairly significant selling flows as well, so that gives me some pause. Let's see here. Jack Prosibia, Pierre could have just laughed it off and joked about annexing Trump Tower or something, but kept the focus on the left. That might be. Are you comfortable and profitable in trading? If you are, then why do you do a job? Okay, so I think there's a couple of things here in this question that I could kind of pick on, but I'm going to try and what is the most useful thing for you first. Do not day trade for a living. I'm just straight up telling you, even though you can be very successful in trading and you can make a lot of money from trading, the entire concept of completely quitting your day job and just doing nothing but day trading is just not very smart. It's a bad trade, and wanting to do it makes you a bad trader by definition. Okay. The amount of edge that's available to retail traders is very limited, and the profits that you get are extremely inconsistent. And so it is just not a consistent source of income that you really live on. And that is just not the life that you want for yourself. Okay. This idea kind of came from a different era. In the 90s, you could trade when electronic trading just came out, you could day trade all day, provide liquidity, and you could make a very consistent living from it. And there were some people that did that. But then the 2008 crisis came along and really decimated that, and the robots took over after that. And so that kind of style of trading doesn't really work anymore. And that was like the style of trading that I would think, I'm not going to say it doesn't work anymore, but it's kind of hard, and there's less money in it. Okay. So like that opportunity for you to like make a full living from day trading really, died. I'm not saying there's not people out there that do make a living from day trading, but it's like, it's such a super teeny tiny portion of people. And I have to start there because I see so many people out there that are like kids just out of school, and they're like, I'm going to become a day trader for a living. Or, they're in their 20s and they're like, how far do I have to get before I can quit my day job? Don't quit the day job. If you've got something that's working and you've got the day job, keep doing the day job. Seriously. Really, in my opinion, trading is not a very good wealth builder, but it is a good wealth enhancer. So trading is really for those people that are kind of like upper middle class incomes and, have the extra time, right? There's not very many people, because usually the people that get to that kind of spot, they're too busy, right? I'm maybe starting to experience that, right? But there are some people in tech that you get paid really, really well in tech, and it kind of all works out, right? So that's the first thing. Okay.
Order canceled.
You just you really need to have more sources of income than just your trading. Okay. Another thing would be like if your wife, if your wife is already making 6 figures and you don't have any kids, then that could work, and maybe you could day trade for a living. I've met a lot of guys like that. Okay. But I would never ever recommend to people to quit their day job and just trade. Never. Okay. And now as for myself, I do feel pretty good about my trading. Although, I haven't taken a trade in a couple of months. I was doing pretty good before that. I do kind of want to get into it. And I guess the reason we're kind of talking about it is because I'm a little bit concerned that the changes that have happened will kind of hurt my trading. I guess we'll see. Eventually I will take a trade. If you can't cover the bills, do an easy part-time job. Frankly, Vital, I think that it's irresponsible to promote the idea of day trading for a living on the internet. Most people that are going to read what you say and stuff might not have the context and understanding to interpret what you're saying and what it means to them, So that's why I just say you should keep your day job. You can do both. If you have a day job where you can trade, then keep doing that, because trading's not really a very good wealth builder. So what you want to do is you want to continue to work the day job and continue to build up your accounts from that. Not just day trading, but like stock ownership and things like that. And that's how you're going to be able to get yourself to, like millions of dollars in net worth that allows you to just completely quit your job and retire and or day trade. Yeah. Let's see here. UPS CFO on international shipments. We expect China to the US to decline a little less than 25%, but that's going to be offset by material improvements in China to rest of the world and the rest of the world to the US. They think that the flow will just go around it. I'm not so confident. That seems like I don't know. Do they really have the data to suggest that it's going to happen that way? I'm reading my Twitter and the conservatives are still on why did Palev lose in Canada? And I'm like, why are you even discussing it? We all knew he was gonna lose. He had a huge margin, and then he lost it all because Donald Trump started attacking Canada. Seems pretty simple to me. Amazon showing tariffs on each product is a hostile and political act. Wait, are they actually doing that? I have not seen that. Okay, so you know what? You just kind of got me thinking about another current issue that I'm starting to get really interested in. And that is this whole idea of trade imbalances. So Donald Trump says that, or his thinking is basically that you look at the trade imbalance and that's like the sum of all cheating. That if the trading was fair, that the trade would be balanced. That's a ridiculous assertion. There's going to be different reasons for why you have an imbalance, like that you really need something that somebody else has. Like one of the examples I saw is like, what are you going to do about the trade imbalance with your grocery store? Right? Like there's a reason why those imbalances exist. Okay. So totally true. But can I make a counterpoint now? For a country, that's a bad, an imbalance is bad. Like you can say like maybe trade imbalances exist for a reason and you can't it's unrealistic to expect all trade to be balanced, but it would be better for a country and the world if there were not imbalances. That's an impossible thing to have. But basically, when you have a trade imbalance like that, what that basically means is your wealth is going over to that country and staying there. Maybe the world is growing faster because of all of that trade, the world as a whole, but more of your wealth is going there than their wealth is coming here. And that's not good for your country. Yeah, you can't make countries import more products than needed. Trying to close those imbalances is stupid. Well, but can we agree though that like obviously trying to close all imbalances is a ridiculous thing, but that it would be best for America that those imbalances were reduced. If we could do it without hurting the economy and all these, I don't know. There's all these other compounding things, but I think that we could say that in general it would be good for the United States for trade imbalances to be reduced. So here's why I've been starting to think about it in those terms. I mean, it'd be ideal, yeah. I see a parallel with another issue that's going on right now, which is ski resorts. So what's happening is all of the ski resorts are getting bought out by big conglomerates. And these conglomerates, they basically do everything that they can to squeeze the ski resort for their shareholders. And this is a very different world from the way that ski resorts were run in the past, where they were privately owned and things like that. And it's making it extremely difficult to live in these small ski towns because like everybody wants to live there. There's all of these people buying up the houses and trying to rent them out and things like that. And then the ski resorts don't pay you very much to work at the ski resorts. You can't afford to live in the town, so you have to live in corporate housing, right? And so what is actually happening is the company is taking all of that money out of that community and taking it somewhere else. Yeah, of course the ski resorts don't pay you. They literally say getting to be out here is half the pay. Yeah, and there's plenty of people that are willing to take that deal, or at least enough for them to continue running, isn't it? Yeah. But it's the same thing, isn't it? The money is coming out of that community and going somewhere else. And so now the community is having to say, okay, you're the ski resort. You don't exist without us here. You take advantage of us. You have to give us something in return. And what can they do? Like tax the ski resort like insane, and then give that money to the residents or something? Like how does that work? Right? But it seems to me that if we were to look at, like, you know, a whole branch of science about dealing with trade imbalances, that it would be the same science. It's a trade imbalance, but it's on a local level. That community, they generate a certain amount of value, but it's all getting exported out. So, I think that the same thing is happening with trade. I think that our wealth in the United States is getting exported abroad. I don't know what you do about it. I can't see a practical way to fix that issue, but it seems like a fundamental issue with the way that our system is structured, right? Like, our system is built to, or the market is a good way to bring together all of the information about supply and demand into one place. And so a market is necessary. Okay, cool. So we have that system. But the system that we have built does not deal with the imbalances in trade between different regions. Particularly not when you have some parts of the world that are very, very developed and other parts of the world that aren't very developed. Perhaps, maybe at some point in the future, all countries would be developed enough that then those opportunities don't exist anymore, and then trade would be more balanced. I don't know. But this all kind of just makes me think, is there some science about these issues that that we could learn more about? That's what I'm thinking. Because it seems kind of suspicious, doesn't it, that there's nobody trying to, like, in the professional community, trying to, you know, how do we deal with these trade imbalances and reduce them? Because they're all making money from the imbalance. They don't care. Oh, I missed your comment here, Vital. Is it a good idea to counter trade a chaos? I don't understand what you mean. Oh, okay. So now the Wall Street Journal is tweeting about this thing that we heard earlier. The White House criticized Amazon for reportedly planning to display on its website how much product prices have increased because of President Trump's tariffs. And in other words, Amazon is really, really worried that the price increases are going to hit them really hard, huh? By the way, you know, I was starting to see like those short imbalances, but it was really, really brief. And it has gotten back up to 53%. Is the algorithm long? It is long. It's been long that whole time, but only up one tick. Seems like the spot place was 27.5. According to the White House, deal with Japan is still probably a week away. Negotiations center on Japan buying from the Alaska LNG pipeline. India is there, my sources say. Charlie Gasparino. S&P 500 seems to be rebounding kind of okay. By the way, you know what I should do? I should just take a break right now and make sure that my lunch is packed, so that when it's time to go, I can just like walk out the door, because I want to stay and watch the aftermath. So this is what I'm gonna do. I'm gonna turn the microphone off here. I'm gonna go and make sure that my lunch is packed and everything. Okay. So let's see here. I'm still seeing stuff on Twitter about the deal with Japan not quite ready to be announced. Looks like the treasuries kind of came down and back up. Our long is starting to do a little better here, the sim long that is. Canadian Prime Minister Mark Carney says the old relationship with the U.S. is over. Okay. Funny how he never mentioned the massive tariffs Canada has put on the U.S. for decades. Oh yeah, it was at 29. I actually was at 28. Was where the algorithm caught it. It kind of looks like it's lining up to go for another long, but the imbalances are kind of, I don't know. Dollar's moving though. Japanese yen is on a tear. Which means that they could continue to push up without the delta rate. Evens should be a stall point. I would expect there to be a lot of liquidity there, if at least, yeah. But isn't it kind of curious that it seems like we're getting there before the well before the news? Did that MBO just show up, Octavius? It's curious. My filter didn't pick it up. Hasn't seen a big stacker pull for about 10 minutes. Oh gosh, I'm browsing through Reddit and I totally forgot about this. So I haven't seen it confirmed, but the rumor mill is that Nexon and not Blizzard will be making the next StarCraft game. Which kind of suggests to me that it would be like a crappy mobile game, but like, oh man, people are fuming. People are fuming about it. $112.1 was last month's high. Oh, okay. Okay. You know what? I don't know if they're going to fill that order at 29. I'll leave that order on because it's in a good spot, but I don't want to have that other one because what if some sort of piece of news came out or whatever and there was a big push down? Yeah, Jolts in 15. Jolts is the big one, man. I think this time around that there's a really good chance that we get a number that really shocks the market. And I think that the imbalances are all kind of favor along anyways. So that could really supercharge it into a big, strong up day. I'm really mad that I didn't get filled at 29. I was close. Actually close enough that I don't think that it would have in this case, but there are some situations where it would have actually filled life, but I don't think that it was actually enough. I think I'm at the front of the queue mostly because of pulling and not because there were orders that went off there.
Order canceled.
Okay. Oh, it's actually taking a short there. That's curious. I wonder if it makes sense that to make it so that like the algorithm doesn't reverse unless it's a bigger imbalance. Like maybe it exits. Maybe if it goes to 47, it will exit, but it won't actually reverse until it gets further than that. They're stepping up again. Yeah, Joel's will jolt the market. Yeah. I mean, I don't know if I think that it could be like a really shocking number, but I'm not predicting a shocking number. I think that it's just going to be a little bit under, but I think that you know, that kind of like fundamental impetus will be enough to really push things over the edge because you can see that they're already chomping at the bit long, right? Well, it's quite a bit back and forth at 31.5. I'm surprised that there hasn't been more into 112 evens yet. I'm sure it'll come, though. It would be awfully unusual to have, like, this kind of a trend up and everything, and then them not clear 112 evens, where all the liquidity tends to be. Okay, there's a big stack. There you go.
Order canceled.
I only took one lot off of that. See, I hate that it took that short. It should have just held this. I guess this is a case where if you look at the longer imbalance, it never went short. I think we should, you know, we said we was going to do this and I never did. So let's do this now. Simple market order imbalance. Period long. 60 minutes. Okay. That was curious. Ah, okay. I'm getting a news headline that China is waiving tariffs against U.S. ethane imports. That seemed to how the robots seem to react to that, although I don't think that that's really anything that should really affect us. I keep thinking about it. You know, like I feel like we've been having some good discussions and everything, but I really feel like we need to take some time out, maybe Friday. Like I really need to time box it to change the algorithm so that it doesn't always just explicitly give up the spread. This is like the longest 10 minutes ever. I'm a little bit surprised, honestly, here. Like, okay, we got to the 112 even, but who knows where we're going to be at by the time the news comes out. And I wonder if this is people front running the news. I got a good workout in yesterday, and my piriformis muscle is not happy. Is that what it's called? No, not my piriformis. The psoas. Yeah. It's like right here at the hinge. Got interested in algorithmic trading, thoughts on machine learning based algorithm. I think that that's a good way to go. It's really, really hard to collect data for order flow to then apply it to machine learning. Really wish platforms were better designed for this, but so it's a tough, like if you're not already a big technical person, it might be too big of a hurdle to jump over right now. But if you're a CS major and you've got the time, then go for it. I've seen a lot of stuff like I've heard people say things about it, but I don't actually know like the solutions to this. But there's basically this thing that like not all machine learning models are good at trading. You need the right tools, and it's very common for people to misappropriate tools that are really designed for standard distributions and things like that, and try and apply them to trading and just get destroyed. And I wish that was something I knew a little bit more about. Every time that I try getting into a book like that, about that, it ends up being a book that's about something different and is way deeper than I'm trying to go, you know? I am a little bit mad at myself here, like, I really should have taken a trade probably somewhere around 25. I could have taken a live trade, be out before the news.
Order canceled.
Okay. So what did it do there? Ah, it got out. Did it get out because of news? I don't have the logging set to tell me, but I think that it's getting out because of news. Because I don't think that that was it reaching its profit target. So it would have to be the news. It's good. Man, they ain't stopping here, man. I'm a little shocked at this. I'm noticing the liquidity starting to pull. I'm sure that here in like a few seconds you'll really see it start to pull. Yeah. Did you see that? That is as when the 1 minute started, like the whole book changed. Like exactly on the second. Okay, here we go. Oh, 7.192 versus an expected 7.5. It was a huge miss. Okay, so CB consumer confidence was 86.0 versus an expected 88, so below expectation. Well, I was gonna try and make a short-term play there, but I think that I screwed it up already.
Order submitted.
So now the question is, how much of this rise was people front-running jolts versus just the larger meta order long? Because you could see a lot of these guys that were positioned for the news taking profits here. I would keep an eye out on this cumulative delta. We might see a little bit of cumulative delta for the next few minutes. ZB, ZF, and ZT all touch the seller stop. Oh, not on mine. Well, some of my order flow data over the night kind of looks suspect. They got close to it, but they didn't quite touch it. The 5-year did, though. Oh, you didn't say ZN, just ZB, ZF, and ZT. That's interesting. Why is there a dog outside my door barking at me? I don't know. But you know what? It's time for me to get going anyways. Very, very interesting that Jolts got hit that hard. Because she loves me. No, it's because she's just annoying. I want to get rid of her. My wife wants a Bernese Mountain Dog, then I'm like, get rid of Maple and we can get one. Maybe I suspect that maybe it's just I don't like girl dogs. I don't know. No, Maple. But Goku is a boy. I love Goku. Goku's the greatest. But Maple, I just don't like her. She's annoying. All she does is like sit and scratch to want to be let out. Scratch because there needs to be water in the pan. And like when Asher decides he's going to be a menace and like wants to pick her up and things like that, she's too stupid to run away. So that's why, again, I don't know if it maybe it's just girl bongs, but I find it really annoying. Okay, I'm blabbing. I'm very curious to see if, by the time we get to work, if they're higher or not. 060. But I think that was a pretty significant development. So I will see you guys. And we predicted it, and I'm just like, why did I not take a trade off of it? I'm so dumb. All right, well, I need to not be such a pussy. See you guys tomorrow. Stay excellent, team.